Hi guys, it's Steve from Disruptive Wealth Creation. There are people out there that just buy a house, do it up and sell it. Today we explore a blueprint in flipping a house and making a profit. Stay to the end and I will share a secret with you that could potentially make you lots of money. Before we start, I would just like to give a quick shout out to Avenue to Revenue, the new kid on the block. Check him out. Now let's get into it. When it comes to making money on a property, everyone can do it by simply adding value to either an existing property or a new property. It can be as simple as choosing the right paint to make a house more attractive, to building an extension on your property. Depending on how much time, money, and effort you are willing to put in will depend on how much money you can stand to make. But before you do anything, the first thing you must do is read the market. Is it a good time to buy? And if you buy and house market drops, what will you do? Well, what most people do is they don't flip the property. They then go and start renting it and wait for the housing market to bounce back. When it comes to making money on a property, everyone can do it simply by adding value either to the property that you live in or the one that you purchase as an investment. It can be as simple as choosing the right paint to make your house more attractive, to building an extension on your property. Depending on how much time, money, and effort you put in will depend on how much money you stand to make. Ideally, you want to be buying the property, doing it up and selling it within a 6 to 12 month period, making a profit. So the first thing to do is to check your budget and how much you are willing to spend. Quick shout out to Black and Blue, who knows all about budgeting. Then you need to decide how are you going to buy your property. You can buy it through numerous ways. You can start off by using an estate agent. This is the easiest way. You let the property agent find the house for you. The only problem with this is the house won't be the cheapest on the market and there will be commission and tax to pay on the property. Having a good relationship with the estate agent may mitigate this problem. Alternatively, you could go down the auction route. Make sure you visit the property before the auction and read all the details in the booklet provided at the auction. Remember that on top of your bid, there will also be tax and commission to pay if your bid is successful. Lastly, you could drop leaflets and do a leaflet drop. There are many houses in poor condition and people may be willing to sell the house to you on a cash deal. If you find you cannot afford to buy the property, you can always find someone else who wants that property and charge them a fee. Buying a house below market value is always the best thing to do. Reading the market is so important. Always buy a house below market value so that if you do spend the next 6 months playing Candy Crush on your mobile and you have not even got out of bed, you can still make a profit if the market conditions are favorable. It's always good to invest in an area where more jobs are being created, leading to higher demand and higher prices for houses and properties. For example, look at Texas, USA, where the Tesla factory is being built. Those thousands of workers coming from outside the state will need somewhere to live. So let's start with the investor that has lots of money and work our way down to the investor with little money. Investors with lots of money are usually looking for houses with additional land so they can expand and build extensions or conservatories. They may also be looking at building up. They may also be looking at doing loft conversions or expanding existing space, like turning small kitchens and living rooms into larger kitchen diners. These guys will have a team of workers, which may include a plumber, an electrician, and a builder, and there's no wait time for them to get started once the house has been acquired. So what happens if you want to invest but only have a few $1,000s to spare? Well, you can add value to your property by tweaking it in a number of small ways. Firstly, you do not have to carry out all these things, but anything that you do carry out will add value to the property and will be mentioned in the next valuation when you come to selling the house. For example, there could be damp or wood rot in a property that could be removed, and this could cost you just a couple of $1,000s. As well as that, there could be old rotten windows that could be replaced with new PVC double glazed windows, making the property better insulated and more green energy efficient. You could also do something in the loft by creating loft insulation, which will help. But depending on the size of the property, this could cost you anything from $5,000 to $20,000. You could also add value to your property by making it more attractive, having a good color scheme, buying nice ornaments, or even creating a wow factor. Check out VANESSA Designs for more information. Quite often you can buy a solid house and the only thing that's wrong with it is that it is old and tired and just needs a few tins of paint to make all the difference. You might say, well, I cannot afford to buy another house to invest. Well, what about the existing house that you're living in now? You can add value to it, sell it, and then move on to a bigger project. So finally, what is it that can potentially make you lots of money when you purchase a property? Well, quite often investors come across houses that have cracks in walls. Many investors shy away from these houses because they think the houses are structurally unsafe. So by investing in a structural engineer, you can find out which houses are structurally unsafe and which ones just have a few cracks. You can use the worrying cracks conversation as an investor to potentially get a really good bargain on a cheap house. Let me know in your comments what you think. See you in the next one.